S&M Live, the talk show for family office and high net worth professionals. I'm Chantel Leeson, your host, and Tony Katrup is my co-host. Tony, say hello.
Hi, how's everybody doing today?
All right, we have a wonderful lineup of guest speakers for you today. Kevin Guttman is going to talk about reverse mortgages for the ultra high net worth. And Kevin is he's a certified reverse mortgage professional. He's one of 191 in the entire country who had that designation. He's also the author of with the Swiss Army Knife for Retirement Cash Flow, Relax in Retirement, and Freedom and Confidence. And you can get them all on Amazon. Tell us what you do with reverse mortgage.
You know, for a long time, reverse mortgages have had a bad reputation, and therefore they've been maligned, misrepresented, underutilized, but it's a powerful retirement tool. And what we're seeing, Chantel and Tony, is today's savvy retirees are sophisticated, well-read, proactive. They do their homework, and they're finding that reverse mortgages aren't for broke or desperate people. So what I ask people, listen, if there were a proven resource that's been around for over 60 years that allowed you to increase your cash flow, reduce your retirement risk, preserve your assets, improve liquidity, add new dollars back into your retirement savings tax-free, would you want to learn about it?
How is that benefiting the person who's already rich, who has a $10 million house? How does reverse mortgage help that person?
Yeah, that's a great question. So what I find a lot of times, Chantel and Tony, with wealthy people, they don't have that many options for tax-free retirement. There's really only four: Roth IRA, permanent life insurance that's properly structured, health savings account, and reverse mortgage. And what I find is when they have their home paid for or a lot of equity in their home, their equity is earning zero return on investment. It drives them crazy. And they can't access their equity without a mandatory monthly mortgage payment, either a HELOC or a monthly payment. So what we do is we help them get a reverse mortgage line of credit where they can access on a $10 million property up to $4 million in home equity. There's no restriction on how they can use their funds. So some people buy a second home, some people help their kids, or grandkids, or help charity. So basically, it's wide open how they can use the money. They might buy a new business or whatever. But the point is they can unlock or unfreeze that equity and use it however they wish.
What are some of the things they can and cannot do with that reverse mortgage?
Really, the only restriction they have is they can't purchase an annuity, because in effect, they're already annuitizing their home equity, right? They can turn it into monthly payments, line of credit, or they can get a lump sum. So as long as somebody's 55 years or older, they can convert a portion of their equity from their primary residence into tax-free dollars. The other thing that's important to note is these loans are non-recourse loans. And what that means is basically the borrower is shifting responsibility of repayment from themselves to the home. The only recourse the lender has to recover their funds is against the house, not the homeowner.
For this person who has a $10 million house, so they go up to a $10 million house, right?
Yes, sir. Yes, ma'am. Yes, ma'am.
And the most they can take out is how much?
About 40%. It depends upon the age of the youngest borrower, but 40% is a conservative number. So think of it this way. They can really become their own bank, right? So yes. They've got all this equity locked up. Instead of qualifying for this money, once they qualify, they don't need to requalify. So it's very easy to qualify for a reverse mortgage. So now they've got access to all this money, however much it is, 1 to 4 million, we'll say, depending upon the value of the home and the age of the borrower. They can use that money however they wish. The line of credit can function as a reserve fund, has a built-in guaranteed growth rate. The line of credit cannot be frozen. Unlike a HELOC, the line of credit cannot be frozen, canceled, reduced, payment demanded. The term of the loan, they can't outlive it. I mean, it's just a beautiful tool, like I said, that's been underutilized and overlooked. And a lot of people have avoided it because reverse mortgages historically have had bad press.
Yeah, but a lot of people like myself, we thought reverse mortgages was like a last opportunity for retirement, but it's beyond that. So a person can they use that money to buy a franchise?
Yes.
So there are a lot of opportunities for people with reverse mortgages. Tell us some other things about reverse mortgages and what are some of the intended outcomes you expect from reverse mortgages, but particularly for high net worth?
Yeah, I wrote a book, the Swiss Army Knife Retirement Cash Flow. It's basically have used equity in their homes to improve their lives in 5 areas: housing, cash flow, medical, dream, and legacy. So let me tell you a couple stories. I met with a couple. They'd moved back to, I live in Colorado. They moved back to Colorado to be close to family. The husband wasn't in the best of health. He wanted to be sure his wife was going to be okay. Okay, meaning she'd live in a house, maintenance-free home, no stairs. She could live there, age in place, no monthly payment. And so before we closed, it was just before Christmas, I said, okay, as long as you live here, pay the property taxes, homeowner insurance, maintain the house, you can stay to age 150. Now, this is the FHA version of this loan. But anyway, 5 months later, the husband passes. I get a phone call. And the wife says, introduces herself. And I say, yeah, I remember. Of course, I remember you. And she says, well, you told us that we could live in our house as long as we maintained it. It was our primary home, paid the property tax, insurance, etc. And there's no payment. Is that right? I said, yeah, that's right. She goes, well, that's the only way I can stay in my home. Now, that may not be a case for a wealthy person, but think about it this way. Somebody can actually buy a house that better suits them in this stage of life. They can double their purchasing power or buy at half price, however you think about it, and have no mandatory monthly mortgage payment. That's a big deal. I have a wealthy realtor and lives down by the Broadmoor in town, which is a very beautiful area in Colorado Springs. And her house is worth $3.5 million. Her monthly payment, Chantel, $7,000 a month, a little bit over $7,000 a month. She calls me up. She says, listen, I'm old enough to get this. I have enough equity. I would rather repurpose that money and buy more real estate or leverage it in another business I have than to keep paying on my mortgage. So this is some of the ways that people use it. Have another lady. She was a retired nurse and she always wanted to visit the national parks. So she had this equity in her home that wasn't doing anything, earning 0%. She took half of it. Now she's earning the regular guaranteed return on that equity, guaranteed, insured. She takes part of that money and she buys one of those Mercedes vans, I think it's a Sprinter van maybe. And she sends me pictures of all these parks she's going around visiting with her little dog. They're visiting all these national parks. So really, what it does is it just gives people more peace of mind, more freedom, more access. It's another bucket of money, another pocket that they can draw money from, except this money isn't taxed and they don't have to repay it. The house repays it.
Your private bank, if you're someone looking to buy a business or scale a business and you have a $4 million, you need $4 million to do that. What a smart way to do it without having to pay closing costs or legal fees. Or are there a lot of fees? Actually, I didn't ask that. There are a lot of fees attached to that reverse mortgage for a high net worth person?
Not really for the jumbo product. So the traditional FHA product, the fees are higher because they have mortgage insurance, 2% of the value of the home. So it makes the closing costs higher. But the jumbo version doesn't have that. They compensate by having a little bit higher interest rate, but the fees are actually lower than a traditional mortgage.
What happens when interest rates start bouncing?
So as you probably know, inflation and interest rates are not friends. So rising inflation, rising interest rates. And what that impacts, like any loan, it decreases your borrowing power. So we used to say back in January or late 2021, somebody could borrow about 50% of the value of their home. So basically, Tony, we've lost about 8 to 10% of borrowing power because interest rates have almost doubled
Sure.
in the last 5 months. So yeah, that's a good question.
Leads me to is if you believe that that's only going to get worse, put a sort of light a fire under people a little bit more to get it done now?
I think what's happening is people are nervous about what's going on in the world. They're nervous about the economy. They know taxes are going up in 2025. So they want to protect part of some people feel we're in a bubble or a real estate bubble. So they want to protect part of their equity. That's one motivation.
Mm-hmm.
Other is, like I mentioned a minute ago, they might want to draw some money out and get their kids started in a business or down payment for a home or help their grandkids or help charity. So this is a way to just tap into some of that money and use it while you're alive, right? have it available to coach your kids or your grandkids versus after you pass and they inherit everything and you're not around to guide them or coach them. So it's interesting because more and more wealthy people are seeking me out and seeking out this product because of these very things, the uncertainty in the world, economy, inflation, etc. So they're saying, okay, if I can protect part of my equity now and there's a real estate bubble, I'm going to do it.
A family, they have an expensive piece of property, $10 million, a $5 or $10 million house. Usually they want to prepare their children for the future, but also build the business, but also prepare the kids.
Well, Chantel, we all have three buckets of money, or three pockets we draw money from. We have our income, our wages, we have our assets, our investments, and then we have equity. And equity is kind of the overlooked, untouched asset. But when we tap that, it allows the other two to last longer, go further, help more people.
Add to that, because I'm sure the audience is yearning for more about this reverse mortgage for the ultra, particularly those who service the ultra high net worth. Any extra things you can add to that for them? Yeah,
I can put this in the chat too, but I've got a great website. It's got some articles and blogs and videos, jumboreversemortgage.co, jumboreversemortgage.co. And it's just designed to educate people and help them see. There's a calculator on there. People can go in and punch in their numbers and see what it might look like for them. But I would just encourage people, don't go off of what your brothers, uncles, neighbors, cousins said, who hasn't researched this at all, but heard somewhere down back in the day that these were bad. Do your own research and find out for yourself, and you're going to see this is really a fantastic tool. It's more like a financial tool than a mortgage, actually. And when you think of it like that, it kind of reframes it and makes more sense. Financial planners and attorneys, definitely, yep.
Yeah, and Kevin, exactly to your point, there's a lot of good information out there. There's a lot of bad information out there. There's stuff in the middle. I think probably get in touch with you, find out the real story. And to your point earlier, it's probably better to find that out sooner rather than later. It's always better to know than to not know or wonder.
Last thing I'll say is people always wonder what's the best time to get it. The best time to get it is when you qualify. So financial planners would always coach us. Start investing in your 20s. You'll never get that decade back. You've seen the comparison of somebody who starts in their 20s and somebody who starts in their 30s. They never catch up. Same thing. Start as soon as you get it. Start the equity earning interest for you, compound interest in your favor, because you won't get that time back. And the beautiful thing is the money's, it's like an open-ended account. It's available to you whenever you need it. So get it when you qualify, and you're not a victim if we get a market correction or something happens in your life where you're not generating the income you have and you can't qualify anymore. All kinds of things happen.
A reverse mortgage, unlike a HELOC, you can invest your money with a reverse mortgage. When you get a HELOC, you are limited what you can do with it. You can't take out a HELOC and invest it in the market.
The way I describe a HELOC versus a reverse mortgage line of credit, if you think about baseball, a HELOC's a great tool, but it's like minor leagues. It does certain things well. A reverse mortgage is like a super HELOC. It's like the World Series of baseball. I mean, it's like just this amazing product that is open-ended, can't be canceled or frozen. No payment can be demanded. Your money's going to grow over time. There's a built-in growth factor to it. HELOC doesn't have that. And again, you shift responsibility of paying it back from yourself as the borrower to the home. So those are the big differences.
The last thought we have, reverse mortgage, it's like being in the major leagues playing in the World Series. Thanks for that. One question we have for Kevin is in a real estate market with rising values, can you quote unquote refinance at a larger credit line when values change?
Yeah, that's a good question. And we're certainly seeing that the last few years. Last year, about half, not quite half of the reverse mortgages that were taken out were refinancing an existing reverse mortgage. People taking advantage of the appreciation, people taking advantage of the lower rates, basically more borrowing power, more access to funds. So really, another way to think about it too is you could roll another debt. So your house becomes responsible party to repay debt that you have from other places.
Great. And what is the largest transaction possible? I mean, I'm wondering, is the sky the limit, or is there a number there that?
Yeah. So we used to say, 50% of the value of the home. Now it's more like 40. So lenders will go up to 10 million. So you could borrow 4 million, but above that, it's case by case. So I've heard of transactions as high as 35 million value. Keep in mind, there's two sides of reverse mortgage. About 95% of the market is the FHA version, which people have heard about for 60 years. The proprietary is about 5%, and there's a handful of companies that do it. So I would say case by case as far as the largest transaction, but we know we can do 10 for sure.
Okay.